Good morning. It's Friday the 18th of November. This is the Phoenix Blue update brought to you this morning by Tom Colley. Well, we've had an interesting week. We've seen dollar strength, dollar strength, dollar strength. We came into the week here at Phoenix Blue with the feeling that the dollar needed some sort of break, a pullback. We looked to trade that or to test that scenario with some short-term intraday trades at our boot camp on Tuesday. That didn't pan out when some good US news came in. We've then basically been sitting on the sidelines, still waiting for a pullback, which hasn't occurred. One of the tests of trading is that you sometimes have to watch price go away from you in that way and not be tempted to jump in if it's not part of your plan, if it's not part of your techniques. We don't trade breakouts here at Phoenix Blue, so we are always waiting for a pullback in order to get into the market. We have an opportunity over the weekend to reassess our position. We'll analyse in detail. We'll do our technical analysis. We'll do our commitment of trader analysis. The commitment of traders data from last week wasn't really relevant because it was pre-Trump's election win. The data that comes out will be the first data we've seen post that election, so that may give us a lot more detail on how the commercials in the futures market have reacted to that election. Okay, right, over to the news that we had yesterday. We'd had overnight, we'd had the employment and unemployment data from the Aussie. Not any great effect on the Aussie itself, basically the market being dominated once again by the dollar. We saw some strong retail sales, or some very, very strong retail sales coming in on the pound, as the pound still appears to be confounding the Brexit critics. Yes, it's true, we're still in the EU, so Brexit hasn't really occurred, etc., etc. So, but having said that, that gave the pound a push. And the pound remains the strongest major currency against the US dollar, although into the dollar onslaught yesterday, the pound wasn't gaining ground. However, it is certainly going to be the area of interest for us as and when we do get a break in that dollar strength and a pullback. Out of the US in the afternoon, we got some really positive unemployment claims data. That brings unemployment down in the States to the lowest for about 14 years. The core CPI was a little bit disappointing and the Fed manufacturing index was down. Core CPI came in on forecast at 0.4, but the overall picture remained positive for the dollar. We then saw Janet Yellen's testimony to Congress. There she basically, reading between the lines, has all but confirmed there will be a rate rise in December. She's painted herself into a corner because if that rate rise doesn't come through, then all hell will hit the markets. So she's good as went as far as saying that there's more data, the latest data, particularly this unemployment data, all points to that rate rise. If we continue to see the Trump presidency playing out in the way that it is in a risk-on scenario with dollar strength, undoubtedly that gives us the possibility that we're going to see more rate rises after this one and at a faster pace. I think that's more as much what the market perceives, and it's probably now got December's rate rise actually priced in almost 100%. So we might get the decision, and we might even get a pullback on the decision simply because the expectation is so high. Today, early this morning at 8:30, we've got a speech from Draghi. It is at an event. He may and may not give any detail. I know he speaks again on Monday next week, so we'll know pretty soon this morning if that's got any significance. Then the only other major data out today is the core CPI from the Canadian dollar. Now, I've already said we've had a sort of disappointing week. We haven't had a lot of opportunity based on the plan we went into at the beginning of the week. We haven't. We've maintained our plan and we haven't jumped into trades when the opportunities arisen. So from that basis, we will still somewhat be sitting on the sidelines today. I'm sure there are traders who've been taking advantage of the long side, and I'd expect to see through the latter part of some day profit taking in the markets. So it's, from our perspective, not a day to jump in and get in on the dollar strength. We may get a pullback that, after analysis of the weekend, allows us an interpretation that we can get into the dollar strength the early part of next week, but we'll let today play out before we get there. This is the dollar index. This is the day of the election. The move between there and there is about $5.50 on the dollar index. That amounts to the thick end of a 6% rise since that low of that point. I appreciate that was just the fear point. It actually came in beautifully to that really long-term fib level there. And since then, we've just seen pure dollar strength without any significant pullback to allow us into that market. We've also seen even more strength relatively from the yen. It's refused to pull back, even to the extent we've seen in the dollar index over this week. We've also made a significant high above this level here on the Nikkei 225. We expect to see those two work in unison. Bear in mind that this is a US dollar JPY chart, so that to the long side is yen weakness. Yen weakness makes the exports from Japan more attractive to the rest of the world, and that in itself pushes equity prices. This is what the Bank of Japan have been trying to do all year. They have an objective to devalue the yen in order to help create growth within their economy. So they'll be sitting quite pretty and quite happy at the moment, having had somewhat of a torrid year to date. Okay, over on the euro, same position, basically the inverse of the dollar index. We're down at these levels here. We'll be looking to see what interaction we get with these levels. There's a historical level on the dollar index that correlates with these, so we'll be looking at those side by side. We'll be looking for a turn in the market at those points going into next week. This is the pound. Yes, you could say this week it's been to the downside, but if you look compared with everything else, it's still maintained this level here. We potentially have an entry for a trade at this level, but personally I think after this week we'll sit that out, wait and see what happens, and look for the market, the pound strength to play out against a US dollar pullback. Over on crude, well, we've had the dollar influence in here. We've also had the OPEC crude restriction or output restriction discussions taking place. The Saudis were making quite positive noises. You know, we're quite cynical about what's actually happening here, but the dollar strength and maybe a change in sentiment on that gave us what would be really a nice high-testing golfing bar here that in any other environment would be a bit of a no-brainer of a trade, although in terms of the stop level, that would be rather high, so we would potentially be looking for an intraday trade at this level. On an intraday basis or overnight basis, price has come down to this level and it hasn't yet given us an opportunity in that area. That may be something that we explore later today if we get suitable price action there. But again, we're only 10 days now away from the culmination of this attempt that dates back for months of the OPEC countries oil producers trying to make an agreement with some of the major non-OPEC producers. So there's still a lot of uncertainty, and there's still the chance of this market being quite volatile in that respect. Over on the Canadian dollar, which is somewhat on the other side of the crude picture, it's reacting more than anything to that dollar strength. Lovely level here. This is one of the frustrations of trading sometimes. Came right into our level within a couple of pips. Gone off, we would have had a stop at break even, would have had money off the table. But the combination of the uncertainty around the dollar and and crude this week meant that we didn't take a position at that point. Again, what we trade is probability. The probability, because of those fundamental events, was reduced here. The fact that it played out doesn't mean we were right or wrong. We were just right not to take a trade where the probability was lower. Okay, guys, so it's been a really interesting week. We'll have the chance to analyse over the weekend. We'll have the chance to look at some significant COT data that's coming out. So we should have a new picture and a plan to go forward into next week. If you are from Norway or in Norway, next week, November the 21st, we have a live trading event there, 3 hours of free trading with the Phoenix Blue fund managers on November the 21st. If you're interested in that, you need to move quickly on that now. Pop onto the website, www.phoenixblue.co.uk. Through to the events page, and you can click through and leave our details there, or simply email us at info, or through the contact page, info@phoenixblue.co.uk, if you've got any questions about that event. We should early next week have a time frame for the next UK event, so keep your eyes open for that. Okay, guys, so keep your powder dry today. Could be a risky day to move into that dollar strength because we expect profit taking. Look forward to next week. Get your analysis done over the weekend, and we'll speak to you on Monday morning and give you an update on how we see next week. Okay, guys, have a great weekend, and we'll speak to you Monday. Bye now.